And next on the stage, we will have a live coaching. And I had some backroom discussion, and at that moment there was no idea who will be part of this event. However, Marvin and Keyvan, I think that they are ready to rock in 5, 4, 3. Guys, get on the stage.
Okay.
All right, you have just one mic.
We're going to share this one and that one, yeah.
Okay. So as soon as we... All right, bit of technology problems. This is a technology event, you know, nothing is going to work.
Understand.
Yeah, the thing is that these guys are going to do live coaching, and I think that Gislo is target in this time. However, I have to warn you. Marvin here, his karaoke favorite song is I Want It That Way. And then on the other side, Keyvan is his all-time favorite is Living on a Prayer. Mm-hmm. So I wonder what's going to happen when these two collide. Guys, the stage is yours.
Great, thank you. Thank you very much. All right, so what we're going to do is this is an experiment exercise that Keyvan and I have actually done in other conferences. And so what we do is we have 40 minutes. And before we begin, is there any other startup out there that's actually interested in getting live mentoring coaching from us? Because we're going to spend 20 minutes, 20 minutes, just like really understanding and trying to sort of be helpful to his business. Because, and maybe we should tell a little bit and give context of where our feedback is coming from. But we're going to call for another startup volunteer in about 20 minutes who wants to come on stage and actually work with us. And so my background, you know, my name is Marvin. I'm a partner at 500 Startups. You know, I run the SF Accelerator program as well as being a partner in the investment fund for 500 Startups. So I've done probably over 200 investments over the last 2.5 years. And I also run the Accelerator program where we've graduated probably about 90 companies at least a year. And I was an operator as an exec at Yahoo and did some startup stuff before that.
So it's very nice to meet you guys. I'm a partner at a firm called Touchdown, and we focus on partnering with some of the world's largest companies to help them create and manage and run their venture capital programs. Before this, I was running the venture capital program over at ICM. And kind of like Marvin, came out of this space from the operator side as well. So Marvin and I really love doing this particular thing because it gives us a chance to give a little bit of insight back in real time to a startup. It's really designed to be part mentoring, and then for us, part just kind of testing the way that we think about a market. So looking forward to that.
Yeah. Hi everyone, my name is Kalle Ek. I'm one of the co-founders and CEO of Gislo. I'm happy to be here, eager to learn and hopefully teach what I have learned during my 2.5-year startup phase. And I'm happy to answer also questions after the talk in 20 minutes. So just please start.
Let's get started.
Yeah.
Gislo. What's Gislo?
So Gislo is a feedback channel connecting people with decision makers in organizations. So our vision is to be the global standard for giving feedback. So what we do is that when you want to give feedback to Starbucks, to Arctic Startup, to Arctic15, to your hotel, restaurant, whatever, before you would have to find the right feedback channel from the company. But now you can go to gislo.com, give feedback to any organization, and we deliver it. That's basically the main idea.
Go ahead.
So just a couple of tactical things. So is it, I as a consumer have some experience at Starbucks. I go to gislo.com. Do I tag Starbucks? How do I give the feedback? I just say, Starbucks, you were terrible today. And then you take over from that moment?
Yeah, so we've now put 70,000 companies already in the system. You can find your nearest Starbucks in Finland, decide which Starbucks it is. Then you write your feedback, perhaps take a picture, send it to Gislo, and we will find a way to connect it with Starbucks. So the basic way is that we go to the Starbucks webpage, find info@starbucks.com, and then we automatically start sending all the feedbacks to their feedback system. And that's the unique way. There's only 2 companies in the world doing the same. One is Tafino in Slovakia, and then Owner Listens in San Francisco, and really excited.
How many people are actually using your product right now, and what's the geographical distribution?
We have tested the product in Finland and UK. We've had 20,000 downloads for the app, and at the moment we don't say what's the daily user rate. But now we're getting traction and want to get the service well known because most people yet don't know it.
So I guess a couple of questions. A lot of the way that people give feedback nowadays is they just kind of tweet it out, or they might comment on it on a blog that they read or interact with. So I'm a little curious how you think of this space evolving in that you're kind of trying to train a whole set of consumers to come to a different site for the specific purpose of giving feedback. Can you give me a little bit more insight into why you think that's going to be an activity that's going to happen, and then how you're supporting that so that as I think of giving feedback to anything, I just naturally come to Gizlo?
So we see our competitors from consumers' mind. You might go to Facebook and post it on Facebook page. You might tweet about it. You might go to TripAdvisor and Yelp. But in all those cases, you have to use your own name. You can't be anonymous. And also it's public. But sometimes, for example, in Arctic startup, I want to give feedback that there's a little bit noise around this. I want to say, thanks for this year. I love this event, but by the way, there has been noise around the event. Can you please change it? I don't want to say anything bad about Arctic15 on public. I want to give private, constructive feedback to Arctic15, and I don't want to go to their site and find the channel. I just go to gizlo.com and leave the courage and positive and constructive feedback from there.
What do you think is the biggest problem for you right now? Because it seems like you've signed up 70,000 companies, or you've gotten 70,000 companies. Do you want to clarify that?
Yeah, so at the moment, we've now put in the system 70,000 companies already, so that when you want to give feedback to Starbucks, you don't have to type the name of the company, so it's easier to search. And the main thing next is how to make it global, because it's a freemium model. We understand that it has to work in Finland, in US, in UK, in Spain, in China. So the next big thing is that how can we find the right type of investors who understand that it's a customer engagement channel, kind of like TripAdvisor and Yelp. This might be huge, but this cannot be some niche service in some countries. So the biggest challenge for now is to find the right type of investors who want to invest in B2C to B services.
Could I clarify one thing? So is it the 70,000 companies, you've gone and said info.starbucks, info.mcdonald's, so you've effectively cataloged how to reach these companies. So you haven't actually created a business development relationship with those companies yet. Right? So in other words, if I'm Starbucks, I'm getting an anonymous tip into my info line, but I haven't yet understood that this is a place where I'm getting a lot of info. Okay, I understand. Okay.
And so the biggest issue then, like I said, there's a business issue and there's an investment issue, right? Mm-hmm. So we have like 8 minutes. That's why I'm like checking the clock. Like, which one do you want to cover? Because we have 8 minutes to sort of give any feedback and thoughts on this one.
I think right now, I think it's best to concentrate on the investment issue, because I've talked with many consumer-faced startups in Finland, and there's gaming. But many companies in Finland, except Futurefly and Wolt, are doing really big on consumer face. But otherwise in Finland and in Europe, there hasn't been that many massive scaling stories. So I'd want to learn more about how to scale from Europe to all around the world with the consumer product.
You want to start?
Okay, so as an investor, when I think about your business, I think about some broad categories. One of them is defensibility. Right? How are you going to protect the market that you're building? So because you're effectively an anonymous platform, it's a platform where an individual says, I want to give feedback directly to Starbucks or McDonald's, but I don't necessarily want everybody to see that feedback. You're missing some of the viral components that built companies like Yelp and others, right? Because in a way, the feedback became content, right? It became something fun to read. It became a way for me as a consumer to understand whether or not this was the right restaurant or the right product. So you're missing a little bit of virality there. So if you don't have that, if you don't have the signal that says, this is going to grow naturally because it's going to draw a lot of people in, then I have to look for the other thing, which is, what do you have from a business development relationship that's going to make you an important partner to the companies that you work with? So today you haven't focused on that, right? So today you've got 70,000 companies, but you haven't built relationship with those companies. A big point of advice would be that you need to start building those. Like, you need to reach out to those teams and become a service that company sees as a valuable way to get direct feedback from its customers, which is incredibly important. But if you don't have that, as an investor, I look at the system and I say, well, how hard is it for the next person to go and scrape 100,000 sites, gather 100,000 email addresses, put it into a system, and then just start marketing that it's a place to do direct feedback? Well, maybe not that hard. So it makes it hard for me as an investor to look at the platform and say, you know what, there's an inherent scalability of that. So you need to find those points that are going to be effectively your assets, right? That relationship that you have with the business, or the relationship that you have with the consumer, which is also important. So if you don't have one or the other, frankly, it becomes really hard to tell the story.
And I would say there's probably two things I'm actually like looking at too, as if it's a consumer product. Number one, what is your customer acquisition strategy, in line with what Keyvan said? Because like, how are you actually acquiring these? If you don't have viral sort of like ways of actually acquiring these users, what are the other ways? Is it paid? Is there some, do you have some quote, I hate this term, growth hacks that you have that you're acquiring them? So that's one thing. Number two, metrics, right? Like, are you actually growing? Like, great, you have like 20,000 users. That's nothing. Nobody gives a shit about like 20,000 users, all right? If you have like 500,000 or 1 million with sort of like growing, right, numbers, that becomes interesting as a consumer product. It's very, very different. B2B and B2C are very, very different type of products, and sort of like how investors actually look at the type of metrics. And so it's like the reason, so if you look at a lot of the consumer products where you all of a sudden they come out of nowhere and you see like just tons of investors jumping on them, is because there's already growth. Like they're seeing like, wait a minute, I'm seeing your user numbers, actually user numbers and engagement numbers doubling like every sort of 2 or 3 weeks or something like that, whatever those metrics are. That Slack, for example, right? Like they were tracking, like Social Plus Capital was like tracking those metrics, like holy crap, like these are crazy, crazy growth numbers. That's what they're looking for. Even if it's a conceptual thing like you have right now, it's not that interesting. I'm like, it's not compelling. For consumer stuff, you absolutely need those growth numbers.
Thank you for the feedback. That's something that we see ourselves, that for the next 12 months, we have to concentrate on getting the numbers and the traction to attract the biggest investors. Once we do that, it's a different story. But without the right numbers, the KPIs, that's of course something that we have to prove on.
And also just to clarify, the right numbers, like depends on where you're getting investors, but like whether it's across Europe, it's not just like growth in Finland. The reality is that you're looking for the big business to consumer sort of opportunities, you're looking for ones that have like global opportunity. And so is it growing in Finland, UK, Germany, US? And it might not have to be like 1 million users, maybe it's like 500,000 or a couple 100,000 users, but there's some geographic distribution that actually shows that there's something there. I run into lots of interesting ideas where like, oh great, like here's an awesome, unique company, but all your users just in Romania. I don't care.
Yeah, so a couple kind of tactical things. I would suggest you look at your platform, and I think the anonymity side of it is interesting, but I would encourage you to use that anonymity as content, right? So if I go to the McDonald's part of your site, I should be able to see what other people have said. I don't need to know who they are, but it would be good to see that there are people that have the same issue I had. You know, the chicken nuggets sucked. Something where as a user, there's more to it than just, I want to throw my voice into the ocean. The other thing I would say is, as you build these points of feedback and are starting to see trends happening in the site, you should, and this might be either algorithmic, so you could build an AI that does this, or it could be a human being that sits and reads comments of the top 50 global sites. You should be going back out and using that information as currency, so that you build a relationship. So if I'm McDonald's and you're coming to me and say, you know what, we've noticed that in Estonia, you're having a real issue with the Big Mac. And we've noticed that in Los Angeles, you're having a massive issue with your salads. That's an incredibly valuable service. And that's an insight that you should be able to grab from the system. But you do have a fundamental problem, which is the one Marvin's kind of pointing out, which is why do I as a user go there the first time? And so there's one of two reasons. One, because I have to, meaning it's the easiest, fastest, best way to get feedback. Or two, because I was told to, meaning McDonald's said, if you have an issue, come here.
Yeah.
So you need to figure out what part of that story you can actually push on. And if it's the relationship with McDonald's or with Starbucks or with whatever, then lean into the B2B side, because you might find, frankly, B2B companies are really interesting to us as investors because that's repeatable revenue, right? It's a SaaS model. It's something where as a platform, you could be a service provider to hundreds of companies. So I would suggest you dig deep into one of those two sides and really kind of hone your strategy along that line.
You kind of said that my pitch today has been that, okay, in the next 12 months, we've tackled all those decisions. And one key thing is that if we get investment from Spain, we have to go to Spain and do the market. If we get investment from Berlin, we have to be in Berlin. If we get investment in US, we have to move to US. And some investors say also that, like, for example, last year in Collision, many people said that, okay, just dominate one market and be the category leader. And if you can then show in other market you did it really quickly, that's also interesting. But that's kind of the decision that we are now doing, that, okay, which market do we want to dominate so that we don't only dominate Romania, for example, and then in 1 year somebody say that, oh, it's only Romania. So what's the building blocks and the stories in that? But yeah.
No, you mean, so here's my take. Just in the beginning, you actually want to spread your net like fairly wide, and then you kind of see sort of like which area region's actually picking up, right? And for me, I tend to be much more, here's how I think about it as an operator. You kind of go where there's pull and not where there's push, right? So you always want to be pulled by the market. That's what product market fit ultimately is, right? Is that all of a sudden you do this one thing or you're targeting this one audience and all of a sudden your product just takes off. And that's pull, right? So that's actually what high growth companies do, is you go into the pull. You just hope that pull goes in the right direction of a big enough market, because you can be pulled into sort of cul-de-sacs too. And so you have to be very thoughtful about that. But my general inclination is kind of spread your net fairly wide, even though you should have a hypothesis, at least as a starting point. But you see what the market actually says and see where it actually pulls you. All right? Does that make sense?
Definitely.
Okay. All right. Do we have any volunteers? Anybody? All right, come on up. We only got like 50 minutes. Good luck.
Hey, thank you, everybody.
All right.
Thanks, man. That was really good. Thanks.
Wonders Beam, have a seat.
Hi,
Keyvan.
All right. What do you do?
I am from Thunderbeam.
Yeah.
We are a blockchain-powered marketplace for investing and trading in startups.
Okay.
Tell me more.
Okay, what would you like to know?
So when you say blockchain-powered platform, what part of that is the blockchain necessary for? How are you validating it? And so you're saying it's trading startups. Tell us a little bit more about what that means.
All right, full disclosure, I'm a marketing guy, but I'm going to do my best. But yeah, so basically there are two parts of the platform. The first part is when the startups are raising. So as an investor, you can come in, you can invest into great companies. You can do it together with other investors. We make a syndicate. This syndicate is a special purpose vehicle that then holds the equity of the company. We then break this special purpose vehicle into a number of tokens. If it's investing 100,000 euros, then we make 100,000 tokens. And if you've invested 10,000 euros, then you hold 10,000 tokens. And then in the aftermarket, once the syndicate is closed, the money goes into the startup, then you can start trading those tokens. And those tokens, all the trades that you do, like how much you own, all the trades you do, who you sell to, at what value, that's written to the blockchain so that we can verify them and they cannot be manipulated. And it allows us to make extremely fast and cheap transactions.
So just to clarify then, you are part AngelList syndicate platform. Once something is funded, you then turn into a stock market. Right, so you basically say, here's 100,000 tokens that represent the value of this company. Now people can buy those tokens and exchange against those tokens. So so you have two problems, right? You have problem number one, which is enough startups, enough investors to actually get the investment activity. And then problem number 2 is once that happens, enough people to care about that company to then buy and trade the tokens. Is that right? Okay.
Exactly. The challenge is that we have to create that liquidity, especially in the aftermarket. We have right now, we just launched the platform a month ago. Right now we have 4 syndicates that are raising. 2 of them have already reached their minimum goal, so they will be syndicated and they will be tradable. 2 of the companies are also pitching tomorrow, so you can check them out and you can invest into them if you're interested. But yeah, you're absolutely right. It's on the secondary market, we need that liquidity. We need to be, I mean, the obvious value is that if you invest into a company, normally you have to wait 5 years or more before the company is sold or goes public before you get your return. But here, if you think after a year, you think, okay, now it's a great time to go in and then like get my ROI, then you have that option.
So the blockchain really is just a story about security of that transaction. It's not actually necessary for the platform, right?
I mean, we need to be able to allow people to trade very, very small amounts very, very quickly and cheaply and at the same time securely. And we wouldn't be able to do this without the blockchain. It's completely safe. We don't need trust. Every single token that represents a given share in a company knows who it belongs to and knows what value has been traded at.
Who do you see as your competition, right? Besides like AngelList,
I mean,
Funders Club.
Before you mentioned AngelList just before, and like when we're like feeling a bit frisky, we like to say that we are AngelList, Bloomberg, and Nasdaq in once. Because we also have a data platform with data on 160,000 startups and 20,000 investors. And that's all free. You can all go use it as much as you want to research competitors and so on, because you need access to data in order to invest. But for the different parts of the business, there are different competitors. There's no one out there doing all things at the same time, like we do. But obviously, there's a Nasdaq private market. They are kind of like trying to do this private market as well. So they're very serious. And AngelList is, of course, really, really big on syndication.
So are you doing the AngelList part simply because you want captive companies? Because you don't actually need that, right? Like here's what I'm trying to understand.
Yeah.
I'm trying to understand which part of your business are you hoping is the core part of the business? Are you hoping that the business is a crowdfunding platform, and so it's a way for a company to gain, or are you hoping the business is a secondary markets platform? Because those are very different dynamics. I like the idea that says, here's 100 companies that we funded in the crowdfunding platform. Now all of those investors have tokens, and all of those investors could divest their tokens into the general market. That's interesting on some level, but you could kind of get to the same place by just saying, hey, any startup that wants to take part of its equity, take your equity, build tokens, and put it into our platform, and we've now got a secondary market for you. So you don't actually need one or the other to work. You need both to work in the way you're building it, which makes me worried as not only as an investor, but just as a general business person. It's hard to serve both of those two masters of acquisition, because you're trying to acquire companies that need to raise funding, and then you're also trying to basically create a secondary market, and those are very different kinds of investment behaviors. So.
I mean, I completely agree with you, and it's a very, very critical question. The logic behind it is that crowdfunding has become quite well known, and we're doing syndication because we also want like more like sophisticated angels with bigger ticket sizes. But for us, it's a way to start populating our marketplace. It's a way to get investors to all of a sudden, okay, if you're already comfortable with crowdfunding, then it's a way to get them over to the secondary market. And I mean, right now, the crowdfunding aspect of it is just we need to start generating some revenue, and we're doing that with the crowdfunding platform. Right now, we're not generating revenue from the trading. First off, because there is no trading, but secondly, because we have a lot of ideas of great ways to monetize it. But to begin with, we just want to prove that it works, prove that it's possible, and we don't want any barriers for people to saying like, okay, you're not better than a stock market. You're also charging the same fees and so on. Like, why are you any better? And we just want to prove that it's possible to trade startups. And like, you can go right now, you can go make a buy order for €1 worth of Funderbeam. And I mean, because you're you, I will actually sell you one of my tokens. Like, you can get it for the same price I paid for it.
Honestly, I know I'm dominating this for a second.
It's okay.
As I hear you talk about the business, I don't know why you actually need the crowdfunding part, other than it's kind of the sexy part of the conversation. It's there's a tidal wave coming of secondary market need, right? Of companies.
And those are so competitive.
So competitive, yeah. I kind of feel like the value, if you've built it right, so we're kind of in a vacuum because we don't know how you've architected it. Obviously, blockchain is an important part of that. But if you built it in the right way, any person who has a portfolio could put their portfolio into your system.
Yep.
And then find liquidity for a portfolio that they otherwise couldn't have liquidity for.
Now that's very interesting.
That's really interesting, right? As an investor who has something tied up for 10 years, and now I have a margin call and I have to all of a sudden divest some of my portfolio, but I can't because it's not public, you all of a sudden provide a necessary part of an ecosystem.
Yep.
And to be fair, like, regulatory issues are going to be really challenging there, and so you're going to have an issue. But if you can navigate the regulatory issue and you've got the tech platform that actually works, that's much more interesting than trying to convince the world to be another crowdfunding platform. But that's my opinion about that.
I mean, I absolutely agree, and we're not trying to be the next big crowdfunding platform. There are so many people out there that are doing great jobs at that, so that's not our end goal. And to add to your comment on the regulation, that's really it's definitely one of the biggest challenges. But I would also say it's one of our biggest strengths, because our CEO used to be the CEO of Nasdaq Estonia, and one of the other co-founders used to be head of compliance at one of the biggest banks. So we're not trying to challenge the regulators. We're working closely together with them to discover, like, what are the right ways to regulate this. And Estonia is a really progressive country. I'm not from Estonia, but I moved to Estonia for this, because it's a unique place to do these kind of tech startups.
So the question is, this is supposed to be mentoring, so this is helpful. Now I understand the background. What's your biggest challenge as you move forward? Besides the fact that you do have two business models, and that's really hard to execute. So I'm not sure, if I'm very, very honest, it's like trying to find your vector into the marketplace. Like, how do you get into a marketplace? And if you're talking about the crowdfunding part, it's not that differentiated, except for you have this blockchain piece. The blockchain piece is actually kind of the unique aspect of it, right? But anyways, the point is, like, what's your biggest challenge?
I mean, yeah, we are the first ones to do this based on the blockchain. It's the first ever. But I mean, there are a lot of different challenges to this. I'm head of marketing, so like from my perspective, and what I'm really keen to learn from you guys is that, okay, I'm head of marketing. I have different groups that I'm trying to target, like crowd investors, small ticket size people, and then there's like people who invest more, like at least 20,000 or so. And it's just like, how do I communicate this, especially the secondary market, this value? How do I find the right channel to communicate that out? Because all investors are just bombarded with messages about the next cool thing.
So, my general feedback for stuff like this, when you have a product that can be used by, like, and this is relevant B2C, B2B, when it can be used by multiple sort of users, you have to start with a hypothesis of, like, segment your customer base or potential customer base and go, hey, think like the opportunity really is in the investors that are actually going to be spending more than $3,000 versus like the micro, I don't know, whatever the answer, but pick one of them and just go after it very, very hard. The route to failure is by trying to be everything to everybody, because your positioning, right? You think about your messaging, your positioning, your channels are going to be completely different with every single one of these different segments. And so you want to start as narrow as you possibly can, because you learn faster in this area, right? The more you learn, the more honed, you figure out all these different things. Once you kind of crack that one, you go and crack the next sort of like segments, and it'll be very, very different. But you cannot, like, it's very, very different. I always talk to these companies, like, I'm doing this, I'm doing this, doing this. I'm like, did you just raise like $30 million and you have 100 people working for you? Oh, you don't. You have like 3 people working for you, like team of 3. You really want to hone all your precious resources and time into nailing one thing down. I mean, this is the death. Like, we've literally invested in, like, I have invested through my team and through my accelerator and through my seed fund. I've done over 210 deals, all right? Most of the companies that failed has been because they've been unfocused in what they're doing, right? Trying to tackle new business models, trying to tackle like multiple sort of like customer segments. Like, it's just unfocused, trying to build too much stuff. and they just run out of money and they get nothing done. The best companies are like really narrowly focused, and people go, well, isn't that dangerous? Like, that's risky. I'm like, no, because if you're going down, like, what if I'm going down the wrong path? If you're going down the wrong path, you're going to find out sooner. And then you can switch.
Yeah, I agree with that. The other thing I would say is, when you're entering a crowded marketplace, one of two things have to be true. Either you're massively differentiated, or you have an insane amount of money. You need one of those two things, ideally both, right? So as I think about your business, I'm going to do something that investors should not do, right? Investors should never project the business they hope you are onto the companies. But let me do that for 1 second, because I kind of want you to be the biggest company I've never heard of, right? I want you to be the company that has locked up 60% of the world's LPs, because the LPs realize you're a secondary marketplace unlike any other that's ever existed. That's kind of where I want you to go. But what I will say, coming out of that zone for a second, is the reason your challenge is incredibly difficult is because I don't think as a company you figured out exactly who you're talking to, right? Because if you're talking to entrepreneurs, what they're going to want to hear is you're the place where they can get money. If you're talking to an investor, what they're going to want to hear is you're going to have the best companies on earth in the platform. But if you're talking to secondary market people, what they want to hear is this is a place to find liquidity. Those are three entirely different messages, three entirely different focuses. Frankly, every one of those has a challenge. Every one of those has a sales cycle. Every one of those has its issues about scaling and growing and reputation and credibility. It's impossible to do all three at once at your stage. You're going to fail if you do that. So you need to pick one.
Yeah, and as an investor, basically, you've just multiplied the risk at every single level, right? Everyone thinks that we're like, we run to risk, is like, actually we try to mitigate the risk. And so that's one of your biggest challenges. Like, you do these very complicated business models. I'm like, wow, this is like risky as hell. And I'm like, the likelihood of you being able to execute one of these things very, very well, already like pretty high, right? Like, just so your ability to execute one is just, it's really, really challenging. You multiply that by like 2, by 3, it's just like, holy crap. Like, yes, if you actually are able to do this, it becomes a hugely defensible business, but like, the odds are just really, really low that you're able to do that. Anybody's able to do this, frankly. No. Yeah, we could do, we have 5 minutes.
Thank you very much. I think we're going to open it up to the audience a little bit, because we've got about, it looks like 5 minutes. Are there just any general questions about business strategies, concepts, investment, just that you've heard that you want to know more about?
Sorry, this is all we got. Yeah. I have a question regarding scaling of a B2B marketplace. So we are selling mostly to companies. And like, our clients are mostly HR directors, HR managers. And then the problem is, okay, we got a few clients in Finland, or like a bunch, and we want to scale. But then the question is, can we really do that with online marketing? Because so far we've only been doing that with hard sales, like cold calls and getting to meetings, and that works. And then the question is, if we do that everywhere, then is it too slow? And kind of like, if those are HR managers, can we really reach them through online marketing?
Go ahead.
So if you take a look at a lot of like SaaS businesses, I actually firmly believe you can scale that with online marketing, where it's like email marketing, content marketing. I'm actually a big believer in these businesses. You look at HubSpot or Kissmetrics, Marketo, up until their untimely sort of demise in a private equity sort of like firm. It actually is very successful. You don't always have to go the enterprise sort of like sales route. But I think a lot of the big question also comes down to how big is the order that you're, you know what I mean? So it's like, if they're paying like 30 to 50 bucks like a month, like, you can easily scale that as a, you know, with online marketing or these tactics. If it's like 100, like if these like big Oracle type sort of like products, you know, like spending hundreds of thousands of dollars like a year or euros a year, I think that's where enterprise sales actually probably is more important, right? Because it's a higher purchase, sort of like, you know, higher consideration sort of purchase. And so I think it really depends. But what you find is that if you're targeting SMB and sort of more of the lower sort of like size sort of like orders, it's no different than consumer marketing with some twists, right?
Yeah, I agree with that. The other thing I would say is it depends on how critical your piece is to the overall efficacy of that group, right? So since we don't know which part of the HR chain you're trying to tackle, what I would say is think about your service and product and marketplace on a spectrum of kind of 3 areas. There's mind share, which is the HR manager, the decision maker on that side, just knowing you exist, right? I would argue the same thing that Marvin does, which is direct marketing and frankly, online marketing methodologies are a great way to capture mind share, particularly if you know how to target your consumer. Then there's risk. So it's switching from whatever they do today to using your system. What's that risk profile? The higher the risk, the more it has to be an enterprise sales cycle. And then there is, as Marvin pointed out, ticket size. Like if this is a massive budget eating activity, it's going to take a slightly different approach than frankly most online marketplaces will offer you the chance to do.
Last question.
Anybody?
Any questions? No, we're good. All right. Yes.
Yeah, I was thinking that which are the startups that you are now excited about? Here in Arctic15, you met with a couple of people. What type of companies are you looking for yourself? I'm not talking about for myself, but for the audience and so.
I don't think there's any sectors that I'm like, oh, well, I'm looking for an AR company, I'm looking for a gaming company. I think I'm just looking for good founders tackling interesting problems that could be big markets. So I'm open, I'm fairly open-minded and willing to be surprised. I don't care if it's B2C, I don't care if it's B2B. I do want them to be tackling something interesting and unique. I don't want to do another food delivery company or like car sharing type company. It's not that interesting or unique. So looking for something unique.
Yeah, so I'd echo some of that. Although I personally am the partner that thinks about consumer tech, Internet of Things, more of the things that have users at the end of them, as opposed to just pure enterprise software side. So I'm not necessarily the SaaS enterprise guy, but I do look for those kinds of opportunities. But I would echo what Marvin said. I mean, amongst our partnership, we're looking for really interesting, unique ideas that we could take back into our clients, that we could take back into our company and really back. So obviously looking forward to meeting all of you.
Yeah, at least some of you. At least some of you. Yeah, I think we're good.
Thanks.
Thank you very much for your time. Thank you, startups, for coming up here, and good luck to you. All right.
Thank you.